opportunity builds on the Illinois Pathways Initiative. The Illinois Pathways promotes career pathways in high-demand industries and occupations, and most people are probably familiar with that initiative in Illinois. The Illinois Talent Pipeline Management approach builds on the Illinois Pathways based on the U.S. Chamber of Commerce's Foundation's Talent Pipeline Management Initiative, which seeks to build stronger connections to economic development, engages employers in building talent pipeline partnerships, and promotes accelerated and work-based training solutions. I've got it. Illinois' strategy is to align economic and workforce development. The Department of Commerce and Economic Opportunity is the economic development agency for the state. In many ways, workforce development is economic development. DCO's Office of Employment and Training is the state's gateway in connecting workforce services to economic development. Illinois employers are the end customer in closing the skills gap. In managing the talent pipeline, we are utilizing our training dollars to help employers train and hire the skilled workers that they need. Sorry. Sorry, bear with us for a moment. To help close the skills gap, DCO's Office of Employment and Training works with the business community in creating and retaining jobs to meet the needs of employers, reducing the skills gap to help companies remain competitive, and expanding career opportunities for youth and adults throughout the state through shared partnerships among employers, workers, and education. Slide 5 contains some examples of how we've used our dollars to help Illinois businesses retain their workers. So these are some past projects. In the first example, through a $500,000 grant, Wheatland Tube, who partnered with St. Augustine College, trained 50 of their employees in industrial electrical and advanced electrical maintenance. So the upskilling of their current workforce enabled them to remain competitive and to retain their current workers. The second example from manufacturing was a local workforce investment area that used their funds with local employers to create 20 on-the-job training opportunities in areas such as welding, CDL, and production assembly. And the final example is another local workforce area that partnered with Spartan Light Metals to provide incumbent worker training to 20 of their current employees to upgrade their skills to fill jobs within the company as production workers, fabricators, and assembly workers. So those examples kind of illustrate how the Workforce Investment Act funding can be utilized to implement strategies to develop the talent pipeline by providing work-based learning solutions for employers and earn and learn opportunities for workers. The training provided is focused on high-growth industries such as manufacturing, information technology, healthcare, and transportation, distribution, and logistics. Management of the talent pipeline helps businesses with talent solutions that fill critical jobs. It also helps to build the capacity for economic development organizations to prioritize workforce retention, and it connects employers with partners to implement accelerated and work-based solutions that improve worker training to full-time productivity. Some of these partners include industry and business associations, public-private partners, economic development organizations, educational entities such as community colleges, and local workforce investment agencies. It also, as part of the talent pipeline management solution, gives us greater flexibility under WIOA for accelerated and work-based learning opportunities. This request for application is one way we are moving towards enhancing these types of strategies. To confirm OET's new approach to talent pipeline management, we're releasing a job retention and dislocated worker grant opportunity that helps businesses remain competitive. So the request for application is for statewide programs to help companies hire and retain workers in high-demand occupations. The applications are due to us by January 30th, 2015 at 5 p.m., and the funding decisions will be made in the spring. Funds can pay for 50% of training costs for workers, and sometimes they can pay for more than 50% depending on the size of the business. Grants under this RFA will pay for skills upgrade training to promote job retention and to prepare the unemployed to re-enter the workforce or train workers for new skills and place them into training-related employment in another position or with a different employer. Those that can apply for the funding include private sector employers, both for-profit and nonprofit, private sector training providers, both for-profit and nonprofit, educational institutions, employer associations, incorporated LWIBs or LWIA Title 1B providers, economic development agencies, industry and employer associations, chambers of commerce, and other organizations with the ability to aggregate employers. Those that can participate in the training include folks that are eligible as traditional dislocated workers, and that includes returning post-9/11 veterans, and also current workers that need training or skills upgrading. Those are incumbent workers. And dislocated workers are defined as those are individuals who have lost their job due to a business closure or a mass layoff. So that's kind of an overview of the Talent Pipeline Management Initiative. The next part of this presentation is going to be more specifically about the RFA and who can be served and what programs are available. And I'm going to turn it over to Deb Waldrop, who is going to talk about what can be done under the funding opportunity.
Thanks, Becky. We're going to start off with the at-risk indicators. And the U.S. Department of Labor says that a job is retained when a worker's job is saved with an existing employer at risk of downsizing or closing, or a worker at risk of dislocation transitions to a new job, whether that job is with the same employer or a new job at a different employer, and they experience a minimum spell of unemployment insurance. Some of the at-risk indicators are when there's declining sales, supply chain issues, industry or market trends, change in management philosophy or ownership, workers lack the necessary skills, or there's a strong possibility of a new job if workers attain new skills.
I got ahead of you, sorry.
Oh.
Okay.
The types of training that we can work with in this funding opportunity, the talent solutions for employer partners include, well, we have an incumbent worker training, we have set aside incumbent worker training dollars of up to $5 million under this RFA, and it includes work-based learning and on-the-job training opportunities, class-sized training, customized training, and the new kind of concept of registered apprenticeships. Under incumbent worker training, we would need to see some skills upgrades to someone who's on a payroll. Employers must contribute at least 10% of the training costs. Recommend that employers match sliding scale between 10 to 50% of training costs based on employer size and other economic factors. Employee wages while paid while in training count towards that match also. And an incumbent worker eligible impacts how you admit, track, and report for our purposes. And as you can see on this slide, the incumbent worker employer match sliding scale is pretty self-explanatory there. Work-based learning or on-the-job training is on-site training to upgrade skills. Employer hires an individual, provides on-site training per a prearranged plan based on the individual's skills gaps. The grant can pay for wage reimbursements of 50 to 90% based on the employer size while the employee is in training. And the WIOA, Dislocated Worker Eligible person, it impacts on how you admit, track, and train. This requires an LWIA partnership, and that's in the RFA document. Work-based learning, on-the-job training, wage reimbursement scale is this slide. Again, it's pretty self-explanatory. It's based on the size of the number of employees. Class size training is the next slide. The only training under this RFA that may or may not include an employer. Training must directly lead to job placement. It's short-term training to upgrade skills for groups of dislocated workers. It's off-the-shelf curricula, but may be offered at an accelerated time frame and in a non-traditional setting. It may also include a bridge program, contextualized learning, and/or limited work experience. Again, for WIA and WIOA, dislocated worker eligible participants, and it impacts on how you track, admit, track, and report. Did you get it? Okay, thanks. Customized training is next. It trains to meet the particular needs of an employer. The employer must match at least 50% of the training costs. The employer agrees to hire successful completers. Existing employee training must relate to the introduction of new technologies, new production or service procedures, or upgrading to new jobs that require additional skills. It may also include a bridge program, contextualized learning, and/or work experience. This is for WIA or WIOA dislocated worker eligible participants. Registered apprenticeships is kind of a new concept for Illinois, where we are working to meet the requirements that the federal government has asked us to do, and so we've included that in here also. Upgrading skills to individuals through academic and on-the-job training. It provides an immediate job. It's industry-issued, nationally recognized credentials. It produces skilled, competent workers, and you must partner with a local workforce investment area for this. And we're going to go to reporting. Everybody loves reporting. So reporting requirements vary depending on the training type. On the left-hand side, you'll see the incumbent worker reporting requirements. That's the Illinois Workforce Training System. And then on tracking system, sorry. And then on the right-hand side, all the other types of training, those are the requirements for that also. And the recap, next slide is a recap of the different types of training, what you're going to see, how we need to report, what the employer match is, and the required elements of that. A Memoranda of Understanding is going to be an essential piece of this RFA also. For non-LWIAs or for non-local workforce investment areas, providers engaged in work-based learning or on-the-job training, class-size customized training or registered apprenticeships, we must have an MOU with the local workforce area provider describing the roles and responsibilities for WIA eligibility, determinations, enrollment, case management, and reporting. And you've got the contact information there that Lorraine can help you out if you need to locate your appropriate local workforce area. For incumbent worker projects where the applicant is not the employer, like an association or something like that, We also must have an MOU between the applicant and the employer indicating the latter's commitment to train and retain workers. And with that, I'm going to turn it over to Chuck. Chuck, are you on the line?
Yes. Thanks, Deb. I'm going to go over the fiscal requirements. The one thing I want to emphasize is that these are federal grants, so the federal regulations apply to all the grants. And the federal regulations include the federal cost principles, the federal administrative requirements, and other federal regulations, including the audit requirements of A133. First of all, the federal cost principles establish a uniform approach for determining the allowability of costs. And there are different cost principles that apply to different entity types. For example, 2 CFR 230 applies to nonprofit organizations. And one thing I want to clarify is that there is a Omni circular that goes into effect later this year, and it consolidates 8 different OMB circulars into one. The Omni circular does not apply to these grants. The requirements for a subaward, no matter when issued, flow from the requirements of the original award. In addition to the federal cost principles, we have the federal administrative requirements, and they establish standards for financial systems and internal controls, including procurement. Among other things, they require written procurement procedures, effective control over and accountability for all grant funds and assets, and records that adequately identify the source and use of federal funds. You have 29 CFR Part 97 that applies to state and local governments, and then you have 29 CFR Part 95 that applies to all other entity types. Other federal regulations that apply include 29 CFR Part 96, which implements the audit requirements for DOL grants. One thing I want to mention is that the current threshold for single audits is $500,000 in expenditures of federal financial assistance during your fiscal year. That increases for fiscal years on or after December 26th of this year to $750,000. In addition, we have the 29 CFR Part 93, which prohibits the use of grant funds for lobbying. There's 29 CFR Part 37, which implements the non-discrimination and equal opportunity provisions of the Workforce Investment Act. They also prohibit the employment or training of participants in sectarian or religious activities. There's 29 CFR Part 98, which prohibits debarred or suspended individuals or entities from receiving federal financial assistance. And you can look up to see if an individual or entity is debarred on the Federal System for Award Management. And then we've got 20 CFR Part 652, which is the WIA final rule, which discusses in a Q&A format the requirements, the statutory requirements in the WIA regulations, or the WIA legislation. If a selected item of cost is not specifically addressed by the cost principles, then the principles of reasonable and necessary apply in determining its allowability. It has to be necessary to achieve the grant objectives, and it has to be reasonable. In other words, would a prudent person in similar circumstances have chosen to incur the cost? And other factors of reasonableness include whether or not the expenditures in accordance with sound business practice, with GAAP, with arm's length bargaining, and with the applicable regulations. It must also be in accordance with the terms and conditions of the grant agreement and the grant budget specifically. Another thing I want to mention is that for a cost to be allocable, you may have indirect or shared costs that you want to allocate to the grant. You have to have a written cost allocation plan that describes the cost allocation methodology. And you may have budget percentages in your budget proposal, for example, 5% of the fiscal director's time will be allocated to the grant. And that's fine for the budget proposal, but you cannot use budget percentages for allocations. Allocations have to be based on actual activity. And they have to be supported by documentation such as time studies. There are some items of cost that are allowable only with prior written approval of DCEO, and the best example of that would be equipment expenditures. Although, given the short-term nature of these grants and the fact that they're primarily for training, it's unlikely that there would be any approved equipment expenditures under these grants. There are certain costs that are unallowable per the WEA regulations or the federal cost principles. They would include economic development. The grant funds cannot be used to pay for activities or incentives to encourage businesses to relocate from one location to another. And in fact, for on-the-job training, DOL requires a pre-award survey to ensure that the OJT employer is not relocating employment from another location. So economic development is unallowable. However, employer outreach and job development activities that are specifically related to training for eligible individuals are allowable. On the other hand, incentives to encourage businesses to relocate are not allowable grant expenses. Another unallowable expense would be entertainment, and that could also include food. Now, food, as part of employee travel reimbursement, could be allowable, but otherwise, generally, food for employees or participants would not be an allowable grant expense. Another unallowable expense would be losses. You cannot shift losses from other grants or contracts or funds to federal grants. Fines and penalties are also unallowable. That would include late fees on invoices. It would also include fees for bounced checks. And contingency reserves are also unallowable. Another major topic I wanted to address is procurement. Procurement is covered by the federal administrative requirements, either in 29 CFR 97 for state and local governments or 29 CFR 95 for everybody else. Generally, the requirement for procurement is that it allows for full and open competition. The administrative requirements outline the allowable methods of procurement, and it also includes the requirements for non-competitive procurements or sole source procurements. And among those requirements would be it has to be an emergency, or there should not be any other sources, or competition is deemed inadequate, and other types of procurement would not be appropriate under the circumstances. Another requirement of the federal administrative requirements related to procurement is that there must be a written code of conduct that prohibits conflicts of interest and also prohibits the acceptance of anything of monetary value from contractors or parties to sub-agreements. We're going to move on to the next section, reimbursement and performance. Before Patrick gets started, I just wanted to mention that even though payment is based on performance, you still have to account for all costs under the grant. Generally, WEA does not allow for any revenue in excess of costs. Any revenue in excess of costs would have to be returned to the department or expended on the grant.
Okay, thanks, Chuck. Reimbursement and performance. WEA is a reimbursement-based program. Funding will be provided on a reimbursement basis reimbursements will be prorated based on the grantee meeting established performance factors and paying for results, not effort. That number one, the funding will be provided on reimbursement basis, is what Chuck was just referring to. It's for expenses incurred. Number two, the second one is based on the grant scope of work. Performance factors will be negotiated by the state. And then number three, paying for results. Ultimately, we're looking to fund these these grants for employment-based efforts. So we're not looking to fund training programs necessarily. We're looking to fund actual employment or retention of employment.
So training programs.
Yes, training programs that lead to employment. All right. Reimbursement performance factors, incumbent worker training, are listed here. The first one, how many folks actually are enrolled in the training? That's a critical negotiating point for us. And then how many actually completed? Factors for work-based learning or on-the-job training. Numbers enrolled in the work-based learning on-the-job training. So those folks that are actually enrolled and starting in the on-the-job training. The second one, retention with that employer. So of those who have started in the on-the-job training, how many have been retained by that employer? Reimbursement performance factors for class size and customized training. How many did you plan to enroll as compared to how many you actually enrolled? And number two, for class size training, 85% should enter training-related employment within 90 days of completion of the training or the end of the grant, whichever comes first. Reimbursement performance factors for class size and customized training only. If the training employed workers after the layoff notice, traditional dislocated worker funds could be used. Retention of 90 days at current employer or through end of grant, whichever comes first. Or entering a training-related job at a new employer. In many cases, incumbent or classroom training might be a more effective strategy for this. Reimbursement performance factors, registered apprenticeship. This program is basically a hybrid of classroom and customized training and work-based learning on-the-job training. So variations of the previously addressed programs can be combined, and we would look for pilots for this that would make a sensible fit under the registered apprentice program guidelines. Reimbursement will be based on the actual number placed in the Department of Labor Certified Registered Apprenticeships work-based training completions. Individuals chosen for enrollment into registered apprenticeships should be carefully screened to ensure they meet the training requirements of the employer. Application key elements. Of course, fulfilling the requirements of the RFA, and the application is completed fully. Number 2, experience demonstrated capacity to manage grant and achieve proposed outcomes, WIA eligibility determinations, case management, IWDS, and robust accounting. By that we mean internal controls, adequate management, and accounting systems in place. You need to demonstrate that you have access to clients, and that you have a relationship with employers. So we're looking for multiple components, and I'll address that in just a minute. But we certainly want to see the direct linkages to the jobs, and that would be through MOUs. Coordination with partner agencies, if applicable. So you may be partnering with a local workforce area. Partnerships are highly encouraged. That's what we're looking for, is developing these partnerships and establishing these partnerships for future activity. Planned activities and outcomes aligned with the RFA, so we're looking for everything to meet up with the goals and expectations of the RFA. Quality and detail of work of the work plan will be reviewed, looked at. Budget, we're looking to see if it's reasonable in relationship to proposed activities and outcomes. For local workforce areas, that would be in comparison to what you generally do with your dislocated workers. And for those that are not local workforce areas, we will be taking a look at that information as well. LWIAs must be on track to meet established expenditure benchmarks. Sorry. The 3 must-have elements. You need to have clients, so you need to have it established and not just say you know of a group or a population. You need to have the eligible clients already established and be able to cite that within the RFA. You need to have an accredited, reputable, skilled training program. And then you need to establish clearly who the employers will be, so that it's not just an RFA establishing a training program. It is an RFA establishing who the clients will be, what the training will be, and who the end resulting employer will be. The budget needs to be, I keep forgetting to do that. The budget needs to be clear and concise. It needs to be appropriate and reasonable. And we are generally looking at a maximum award of $350,000. Please be sure to respond to all elements of the RFA. Don't leave any blanks. Please put in there not applicable or something to signify that you are addressing that point in the RFA. Be clear and concise, and mind the timelines for this. You can apply now. It's due by 5 p.m. on January 30th, 2015 to ensure full consideration. You can apply after the deadline, but those applications will be based on funding availability. We do have online dedicated resources, and that is through our Illinois WorkNet, as you can see in the PowerPoint slide here. And 2 contacts that are also listed there. One is myself for the northern region, and the other is Deb Waldrop for central and southern region. The materials are also listed on this website. The PowerPoint is included, the RFA, all of the necessary materials that we have discussed in this PowerPoint are all listed under the materials section here. In addition to that, the program goals and other information are also listed on this dedicated webpage. For questions or more information, please go to www.illinoisworknet.com, Illinois Talent. And the final slide here has myself, Deb Waldrop, and Lorraine Warham listed here for any additional information that you might need regarding the RFA or once grants are submitted, any additional information that you might have. Okay.
Okay, that concludes our presentation for today. The webinar is going to be available online. All of the questions that you have, that you post today, will be compiled and answered and put under frequently asked questions. You can also submit additional questions as they come up and you're working on the RFA. Submit them to that link, and those will be answered hopefully within the day of your submittal, depending on what time of day you're submitting them. But that should be a good resource, and we just encourage everybody to think about the demand sectors of the economy in your area locally, to partner with your business representatives and employers that you know there locally, and if you're a business, to reach out to your local workforce investment areas and your educational providers to see if you can, what kind of packages for training and accelerated training you can put together to help us supply the Illinois talent pipeline. So we thank you for your time on this today, and we look forward to seeing some responses to our request for application. Thank you.